Seagull. This is my friend Luis, and he used to own a cryptocurrency exchange in 2015. So maybe like Luis, you can share with us some of your experience owning the exchange, and also what's your view of cryptocurrency investment? In the first place, what is cryptocurrency?
Okay, so before we start discussing about cryptocurrency, we need to discuss about the underlying technology, which is blockchain. So what blockchain does is that it keeps record in what is known as a block. So, and every block is linked to the previous block through a hash of the data that has been stored in the previous block with all the timestamp. So in that sense, all the data are chained together from the very first block of data to the very latest block of data. So in that sense, it protects the technology, and then it protects the data from being altered by third party.
Ah, okay. So in that way, it sort of like mitigate the risk of being hacked.
Yes.
So I'm a value investor, and I'm pretty sure that there are many value investors out there, and we know how to evaluate company, right? Read their financial statement, understand their management, and understand the business model. So how do you evaluate a cryptocurrency investment, a token, for example?
Okay. So there's a few ways of for understanding. First of all, for cryptocurrency, where we're talking about general cryptocurrency like Bitcoin, Ethereum, they are based on pure supply and demand. Okay, so when there is a need, when people want to buy more cryptocurrency for any kind of purpose, like to hold asset as a holding, then the price will rise based on the demand. And when there's a less of a need for that, then the price will drop. So that's one way of managing. Then there are the other alternative coins. So for example, there are like Ripple, they are like Stellar. Those are coins used for inter-border exchange of currency. So for those, there is a specific use. So from that, you can explore whether such a need that currency is created for. What are the demand during that period of time, and from there you can extrapolate certain demand expectation of the pricing.
Okay, so as a normal investor, how do we read those prices and understand where the demand is?
Cryptocurrency is still a very new asset class. So in terms of the demand and supply, a lot of times it's based on news and articles and acceptance. So for example, when there was a South America country that decided to make cryptocurrency Bitcoin tender in the country, that create a certain demand for the cryptocurrency, and that is expected to bring a certain price increase.
When we do stock investment, for example, right, you understand and evaluate the company and you just buy and forget about it. In terms of cryptocurrency, is it the same thing?
So in a way, it's similar. If you look at big cryptos like Bitcoin, Ethereum, those will be the one that holds the value. So in the long term, their valuation is bound to go up. So whenever there's a drawback, you could always purchase into the crypto, and then you just buy it, hold it, and forget about it.
They are like the blue chip stocks.
Correct. So literally, you just buy it, forget about it, but don't forget the password. So after a couple of years later, review, and you're probably
So what happens if they forget the password? Is it like everything is gone?
So if that will depends on what kind of wallet are you using. Okay. So there are different kind of wallets. So for example, you could own your own crypto wallet, and you own the token yourself directly. So those will be the ones whereby there isn't a platform to hold the wallet for you, and you run the risk of forgetting the password, and then you are not able to access your funds.
Okay.
Yeah. So there are also the type of wallets that's issued by exchanges. So in that kind of scenarios, then the platforms will be able to help you to retrieve your wallet.
So I think it's the same for cryptocurrency fund. So the fund manager will take care of the things.
Correct.
Okay.
Yeah. So there is a different risk in both scenarios. So with the exchange, the risk will be on whether the exchange itself is able to secure their platform. That's why I would suggest that if you are buying into cryptocurrency, go for the larger platforms.
I think that's the same as, if you buy stocks or you buy unit trusts, mutual funds, you also choose bigger platforms because the technology is better, the fees are lower, and also the customer base is there, so it doesn't go bankrupt that easily, right?
Correct. Yes.
So it's the same theory.
I would advise them to read up a bit more about the market first, like every other investment. Crypto,
Really understand the market.
yes, truly understand the technology and the market behind it. As cryptocurrency is still a very new asset class, I would suggest that there are other investment that you can go for, and yeah, this might be an asset class that you can use for diversification rather than be the first investment that you make. I would think that it depends on what is the risk profile of your customer, whether they are high risk or whether they are low risk.
There's no low risk people who invest in cryptocurrency, so it's all aggressive. I'm
Yes.
just assuming.
Yeah. So for
Then how aggressive?
yes, it's a matter of how aggressive are you. If you are extremely aggressive, you could purchase into the alternative coins. Those are some of the newly launched coins where, for
You have
example,
never heard of.
there are utility coins that are being launched. For example, some exchanges will actually have coins that they issue on their own, and it depends on the exchange profit margin, and then they will issue. You will see the price change based on how the exchange is performing.
And there are like kitty coins as well.
So CryptoKitty is not exactly a coin. CryptoKitty is more of a new use case for blockchain. So what it does is that they use blockchain to create characters, which in this case is cats. These cats are created, and then their profiles of the cat is stored as part of a blockchain.
How about like crypto Snoopy?
Well, there is actually a lot of
Crypto
different
puppies.
there are cryptos. For example, one of the new use case is NFT, non-fungible tokens. So those are actually used for art purpose at the moment, whereby certain artists will create digital arts, and then they will use the blockchain to track the ownership of the art piece. So
Right.
these are some of the new use case and that we see are being used for the technology that is that evolved from cryptocurrency. So what I feel is that cryptocurrency, blockchain, this is still a very new and evolving technology and asset class that not a lot of people fully understand.
What would be one advice you give to the many investors out there?
I would say that if you are already a regular investor, you can look at cryptocurrency as another class of asset for you to
Diversify.
be diversified. And if that is your purpose, then I would suggest that you can look into platforms like cryptocurrencies like Bitcoin, Ethereum. These are the two larger types of cryptocurrency that are more stable. So you can go into the market now, observe it for a while. If you see the price starts to have a pullback, that could be a time for you to buy in. Yeah.
And also for those people who want to buy a bit of Bitcoin and cryptocurrencies but have no idea how to begin, you can also find a fund manager.
Yes, of course.